Hello guys, welcome back to a new video. In this one, we're going to do a backtesting session and we're going to backtest the model that I previously shared in my latest videos, which is consolidation, sweep into an unmitigated zone and then taking our entry. So basically it is this one right here on the screen. We have a zone, unmitigated zone here. We have a range above it, so price is consolidating and generating liquidity. And then what we want to see a sweep, and a lot of traders will see this as a market structure shift, but we're going to take the counter trade right here. It is not actually a counter trade, but we're going to fade that market structure shift or that flip or that break of structure, and we're going to take our entry here, as you can see, after price mitigates deeper levels of the zone, and then you're going to take price higher. Plus, we need a context and a higher time frame confluence, all right? This is one of the highest probable model out there, guys. It repeats every single day in every single time frame, every single asset class. If you understand this and you pair it with the right context and the right higher time frame confluences, meaning it is either a part of a higher time frame expansion or a higher time frame pullback, and then it is in the right context, meaning it has a purpose. So why should this pattern idea work? You will have an insane high win rate and you can actually learn from your losses. All right, you will know exactly why you took a particular loss. So we're gonna backtest this in this video right here, and instead of doing a long backtesting video, I'm gonna try to do a max of 15-minute video, and we're gonna focus on taking entries, so as many setups as possible, instead of explaining every single leg, why that leg happened, why this price leg happened. Now we're gonna focus on entries. All right, I'm going to look for this during the day. So without any further introductions, let's just get started. All right, so we're going to choose a random day from the late of 2022, the last 4 months. All right, so let's choose maybe this one, right? So I'm going to take some time to set the environment, and thus I'm gonna fast forward the process. Oh, excuse me, this is a Saturday. All right, so we're gonna choose another date, and let's choose Monday. All right, the next Monday of that week, 12/12/2022. All right, so I'm gonna move forward to 10:30 a.m. because I usually start trading after that. The swings are clearer and the volatility is high, thus the lower time frames like the 5-second and the 15-second are clear. All right, clean price action around that time, but of course you can trade it anytime. So this is only for the sake of volatility. All right, so I'm not going to explain each leg of the market. I'm only going to explain when I see an opportunity, right, and why I should take this trade and why I should avoid it. So I'm only going to pick high probability trades. I'm not going to trade every single pattern, right? I'm not going to trade every single pattern right here. And by the way, the consolidation doesn't have to be this long right here. It could be just like 1 or 2 swings and then sweep and then continue up. So it could be this way right here. All right, this is also a sweep. It doesn't have to be a long range like this, otherwise we're gonna wait forever. So a sweep, top, and then taking the market up in the other direction. So what do we have here? Let's go to the higher time frames, like the 12-minute or the 15 minutes. We don't have much to work with. As you can see, we are going back and forth. We are sweeping the lows and the highs. So I guess we're going to focus only on the lower time frames like the 60-second and then scalping the 5-second. Here we only have a sweep, we don't have break of structures, right? We have also this zone. We tapped into it. Let's go to the 50-second, 15-second. Tapped into the SNDR. We still have unmitigated areas right here. We have this intermediary or intermediate term high just above the 50%, right? We have this high at the SNDR. This could be a nice entry after sweeping this high. So let's put a limit order right here. Alright, we swept the high right here. Let's see if we can get a TP or a stop loss. If it's a stop loss, we're going to move forward. We are scalpers. Remember, we are not swing traders. If you are scalping, it's okay to take losses during the day. Alright, so this was a winner. As I said before, if it's a loser, then it is okay, move forward. This is why I like scalping. We have multiple opportunities per day. I can take like up to 7 or 10 trades per day. And if I have a win rate like 60 or 70%, I'm pretty sure that I'm going to end up the day green. Although I took like 4 losses or 3 losses during that day. So why did I took this setup? Let's go forward to the 60-second, right? Or the 1 minute time frame. So what do we have here? After this huge move to the upside, we didn't have any break of structure right here, but it was only to this zone right here. So we have a sweep just like this. We have a sweep of this intermediary term or intermediate term high into this zone and then continue lower. So we don't have a break of structure. This is only a sweep. It indicates that we are still bearish. And here we have this zone, right? Price printed this zone on its way down. On the 15-second, it is cleaner. Breaking here, we have left some highs as liquidity, especially this one. So watch out the highs that are in bearish example. Watch out for the highs that are just below important levels like the 50%, like the 70% or the 30%. But if the trend is not that strong, then pay attention to the 50% and the 70%. 30%, not that much. All right, beautiful. We have a sweep here into the 50%, and then we have a nice meltdown to the downside. Make sure to mark up the highs that you want to see price sweeps those highs and then tops into a zone and then continue lower. In this case, we have this swing, this high, and we have this whole unmitigated zone. We have deeper levels of this zone that has not been mitigated yet, right? So also we have this high of this zone. Let's see. So as you can see, beautiful sweep on here. Your stop loss could be here, and then your TP is here on this zone. So as a target, you need zones as to frame both your entry and target and your TP. Now, if you are not confident in the sweep, just like here I was a bit confident, but if you are not confident, you can wait for a CSS or a candle structure shift. For example, this one right here. This is the last candle that put in the high, and we have broke it here. And so this confirms that this is only a sweep, a reversal. All right, so after price swept this high, we continue lower. We have now this zone. Let me clean the canvas. Now you might want to enter from this zone, but it is a bit risky. Why? Because now we have this whole range, and this is a higher time frame swing point. It belongs to the 60-second or the 1 minute zone. So we might see a potential pullback. I'm not sure if it's going to happen here and then pulling back, but eventually we're going to see a pullback. So this zone could be liquidated. It could offer a reaction, but let's see what's going to happen. This is also visible on the 1 minute, right? This is the SNDR. So as you can see, as I said, this zone has been liquidated. I told you that it is not a high probability zone, because now it looks like that we are ready to pull back to this whole swing. All right, so now we have the pattern, as you can see, and we have a lot of unmitigated areas above us. For example, this one. So although we are at the top of that swing point, but this still can give us a reaction to this right here. So we have a target and we have a sweep, right? We have the range. So this one can give us a reaction. So let's take an entry from here, our stop loss here, and let's target only a 1-to-1. I'm not going to target all this one, although it could be the target, but let's take only a 1-to-1. All right, so as you can see, a beautiful, another winner. All right, so the thought process of, or the logic behind this trade is that we are trading higher. As you can see from here, we are trending higher. We have this flip or lower time frame flip. We left this zone. We have this intermediate term highs just below important areas like the SNDR. So we have this swing point, we have this SNDR, this one right here, and we have liquidity just above them. So we used the pattern as a target. We have two patterns right here. We have this one and this one, right? We entered on the sweep on here to target the sweep from here. So let's see. We tapped into the SNDR, as you can see, and it gives us a nice reaction, that SNDR, after the sweep. So as you can see, we used this. So this was the real pattern. It was a reversal and it was a range, and we had a range and then sweep of all these highs right here, right? And then we traded lower. So I took the sweep from here, although I know that price might reverse because we are at the top of the swing point, but I took it because we have a target right here. So use swing points as a target also, right? Not just entries, use them as a target. For example, if this high right here, or if this zone has been mitigated and then we had the sweep, then I wouldn't take the entry. All right, so pay attention. These details, little details or filters are very, very important. If we had an medicated zone right here, I wouldn't take the entry from here. So let's forward. We have now this zone. You might want to enter or these zones right here. I don't recommend it. It could offer the pullback, but you really don't want to enter pullbacks. It's better to take entries with the trend, because you're gonna get a quick TPs instead of trying to reverse the whole trend. We have this unmitigated zone right here. Let's see, we swept all these highs, but I'm not too confident of taking this from here. I'm not confident with taking the short from here. Not yet. I need to see a confirmation. It looks like that we have a flip right here. And then it's not a valid flip anyway. So I don't like to take flips. I like to fade them. Because flips, and listen to this, flips fails more often than they work. They work in very, very, very specific criteria, context, higher time frame confluences, but most of the time they are not in the right context. So what happens? They fail. And my model is based on that. So for example, this is a break of structure, but I faded, as you can see here. I took the opposite setup and it failed, right? Now we have a flip right here, and also our model. We have a sweep of this short-term high, right, into the 50%. And we are inside that unmitigated zone, right? So this could be a nice setup. So let's take it. All right, so I'm not gonna lie, this is not the best setup, right? And one of the reasons is that we are at the month of December. We are at the last month of the year, and the volatility is not that good. So here we have, as you can see, this is from the 50%, this whole swing point from the 50% all the way to the 100%. This is like 6 points, right? So usually it is like 20 at this time in the middle of the year. So this is why we see these ranges. Price struggles to move from one point to another. So it is a winner. I'm not gonna complain. As you can see, so far we took 3 winners based on the same model: sweep into an unmitigated zone, and then taking the trade lower or higher. Alright, so this is the last trade of the day. So let me explain the logic behind this trade and why I took it. So first of all, what do we have? We are inside a 1 minute swing point. So remember that I told you that this swing point right here is likely to fail because it is located at the top or at the bottom of the range, this whole range. We are looking for shorting from at least the 50% of the range after sweeping some important high, intermediate term high. Now what happened next is that we traded all the way to the origin of the move. So this swing points right here are the origin of this whole down move, right? And then what happened is that we had a flip, as you can see here. price traded lower, left all this highs, and then one more time sweep. So as you can see, the sweep is an important concept, and I'm basing all my trades ideas on it. The sweep into the 50%, and this is like the 70% of this zone, and then we continue lower, as you can see, all the way to here. The swing point offered a pullback into here, and then we had a sweep right here. We have a filled market structure shift, sweep into the 50%, as you can see, of the swing point. So this is what I talked about earlier. We have an intermediate term high just below an important level like the 50%. We swept it into the 50%, and then we flipped, and then one more time we lift a high just below the 50%. This is engineered liquidity. We swept the high, and then so usually my trades go straight to TP right here, but one more time tapping into higher levels or higher swing points right here, unmitigated swing points, and then it took forever to hit my TP, but eventually we did hit TP and created a new swing point, which is and this one right here. So let's see what's going to happen. So as you can see, price tapped into this swing point right here. This zone, the origin of this whole move. So if we run a fib from here all the way to here, the same pattern, guys. This is insane. I didn't notice this. So this is why I like dtfx. Every single leg move is you can explain it. So just like here, we have a high, intermediate term high just below an important level like the 50%. We swept that high, and then we continue lower. So this is beautiful. We should now trade lower into this zone right here. So I believe now this is the end of this video. I hope you find it helpful and informative. And if you have any questions, please DM me on my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.